Okay, guys, every once in a while, somebody will reach out to me and they'll say, Sean, don't you think that collectibles are a good investment going forward? And it's very hard for me to answer this particular question because I don't know what they mean by the term collectibles. Are we talking pop culture collectibles? Are we talking luxury collectibles? Are we talking contemporary art? Are we talking fine wine? Remember, the basic definition of a collectible is simply an item that is less than 100 years of age, because if it was more than 100 years of age, it'd be considered an antique. And the item has to simply sell for more on the secondary market at present time than what it originally sold for when it was first produced. So for instance, if a comic book has a 12-cent or 20-cent cover price on it, and it is selling on the secondary market for just $1, that particular item qualifies as a collectible. This is why when you guys ask me blanket questions like this, are collectibles a good investment going forward? It's nearly impossible for me to answer because I don't know what you are thinking of in your mind when you hear the term collectibles. And to prove this point, we're going to go over an article today that is entitled From Handbags to Classic Cars. The value of collectibles is up 7% annually. And this particular article first premiered on Barron's, which is an investment publication. I'm going to put a link to the article in the video description below, on August 8th, 2023. So it is fairly new. Now, I know what a lot of you are thinking. Well, wait a minute, Sean. August 2023, that's like last month. My comic book collection fell in value 20 to 30%, if not more. My graded video game collection crashed. My collectible card game collection, made up of Pokemon and Magic the Gathering cards, even that's down 10 to 20%. And hell, I'm not going to even tell you what some of my other pop culture collectibles are trending at present time. So how can this article claim that collectibles are up 7% annually? Well, I just answered that question. It depends on how we define what a collectible is and if you can afford to invest in these types of quote-unquote collectibles. So let's read the article. As we go through this article, you'll see exactly what I mean. Novice collectors should focus their investing efforts on what brings them happiness amid wider economic uncertainty and unpredictable returns, according to Knight Frank's Luxury Investment Index, released Tuesday. Let me state that again. Knight Frank's Luxury Investment Index. The index, which tracks 10 luxury collectibles, art, watches, jewelry, coins, wine, classic cars, colored diamonds, which I do not recommend investing in, handbags, furniture, and rare whiskey, found that, as a whole, the value of these collectibles rose 7% in the 12 months to the end of June. So, long story short, guys, the reason why those of you on the pop culture side of the collectible spectrum aren't making any money is simply because you're not investing in art, watches, jewelry, coins, wine, classic cars, colored diamonds, handbags, furniture, and rare whiskey. You guys hate me yet? I'm just kidding. I'm going to go on with this article. I'm just trying to show you how everybody defines the term collectibles different. This is why you can't use a colloquial term and say, well, Sean, so-and-so thinks that investing in collectibles is a great, great avenue to take to build wealth. Do you agree? I can't answer that because I don't know how you're defining collectibles. Back to the article. While that outpaces the returns on some other assets, it was the weakest annual performance for collectibles since the second quarter of 2021, Knight Frank said. Economic uncertainty and higher interest rates will cast a long shadow on luxury collectibles, even though they're still up 7% compared to some of your pop culture collectibles out there, guys. Novice collectors should focus on what brings them joy. Perhaps that's more important now that value appreciation is far from guaranteed in these asset classes. Art topped the index by a long shot, growing in value by 30% in the year through the end of June, according to Art Market Research's All Art Index, which uses data from auction sales worldwide. However, those gains may have already peaked. The auction season spring sales are the first measure of market confidence, and recent results suggest growth is already starting to slow. Following art, watches and jewelry rounded out the top 3 best performing collectibles of the year. Now, in all honesty, I would really love to see how they got these numbers, because if you're somebody like me that does own a Rolex watch, if you invest any type of money in Rolex watches, vintage or new, you know that that market is pretty much down double-digit percentage points right now at present time, especially on the new stuff. So I would love to see where they got the data for these numbers. That is something that I cannot find. It's not in this article, because I kind of doubt that when we talk about watches, I'm assuming to get that 10%, the return that they're getting on these watches is based on vintage watches. I cannot imagine they are still eking out a return on brand new Rolex watches when there's still a waiting list and the prices have fallen sharply and demand has actually fallen for a lot of that stuff right now due to the overall slowness in the macroeconomic environment that we find ourselves in. So I would love to see those numbers. Rare bottles of whiskey were the only asset in the index to see values drop in the short term, down 4%. But collectible tipples ranked as the strongest 10-year performer, with prices rising 322% over the last decade. I may be doing a video on collectible whiskey. I haven't really decided yet. It's not something that is on top, meaning it's not something I'm actively working on, but I did do a video on wine investing. So it would be interesting to contrast that with whiskey investing and collecting as well. Bottles of rare whiskey have had a far more sedated time from a performance perspective over the past 3 years. Higher value bottles have retraced recently due to a myriad of geopolitical, socio, and economic reasons, obviously. So you guys can read through this article. I'm just stating I want this to be a learning lesson for you guys. If you're going to reach out to me for advice, blanket advice, and you go, hey, Sean, don't you think collectibles are going to be a great, strong, always increasing asset class going forward? I really can't answer the question because I don't know how you're defining collectibles. Hope you got something out of this. Thank you for watching. Let me know your comments in the comment section below.